Today, we are about to present a truly unique product and one of the world's best performing professional market-making system for the BitMEX exchange. This system has been developed since 2013 by a team of engineers, mathematicians, and it has been working and tested on a variety of other markets before we started on BitMEX. The bot trades automatically 24/7, 365 days per year, with something called Bitcoin perpetual contracts. And we are accumulating Bitcoins every day through our profits. We got one of the most advanced artificial intelligence platforms today in the cryptocurrency trading space. It is a real machine with real intelligence. It is a piece of physical hardware with hardwired intelligence and processing components that were custom built. It does not rely on third-party software, technologies, or platforms, which gives it the advantage of being 100% under the operator's control. The system operates in several pieces, located in separate physical locations to ensure physical security and anonymity of usage. It is operated by a high-speed, proprietary trading rig capable of monitoring millions of transactions. We are running a front-running API plug on BitMEX, which prioritizes our API orders to the order book in the first 10%. In the world of high-frequency trading, this corresponds to an advantage of 2.5 milliseconds, often resulting in up to a 1% price efficiency gain for us compared to retail competitors. The system has a 100% uptime and is monitored around the clock by our technical staff. Before we go into details, we are not financial advisors, and any investments into trading may potentially cause losses, especially since we are trading with Bitcoin as the underlying asset and cannot foresee the future or be responsible for any downtrends in the value of BTC compared to the US dollar or other fiat currencies. On the other hand, we are strong believers in the blockchain, cryptocurrencies, and especially Bitcoin. Long-term, we believe Bitcoin to become a leader among all assets, and something which will only be described as digital gold in the future. In our view, 2019 could be the year where Bitcoin exceed the all-time high and go past 20K again. Wall Street's biggest institutions are getting on board with all their power and money that follows. In the first quarter, the New York Stock Exchange releases the Bakkt exchange, in which retail investors will be able to trade with Bitcoin futures. Shortly thereafter, Nasdaq will follow by launching a Bitcoin futures product together with Fidelity, which is the fourth largest asset manager in the world. These launches will attract a lot of interest from mainstream media and investors and will surely increase demand for Bitcoin. This could possibly start a bull run with increasing Bitcoin value for a long period of time. So, let's talk about the trading AI-powered automated trading system itself. Currently, we are only trading on BitMEX and with Bitcoin perpetual contracts. BitMEX is the most liquid exchange in cryptocurrency space, and Bitcoin is the most traded currency on it. Our system does not have any current scalability issues, and the only potential limitation would be on the exchange itself. On the other hand, we could easily move liquidity to other exchanges if necessary. The sky is truly the limit with this system. Trading is fully automated and capable of market monitoring and doing live hedge risk adjustments in real time. What you see on the screen is one demo account in a long position. It is just one out of a multitude of accounts in the current trading system that is automatically run by our system. 50% of all our accounts bet on the market going up, and the remaining bet on the market going down. This is why it is called a hedging array. It means that whichever way the market turns, we will make trading profits from half of the accounts, while the other half build up positions waiting for the market to retrace. Worth mentioning is that do not close any trades in losses. This is made possible since our trading systems simultaneously draw data from the 10 largest Bitcoin exchanges to calculate risk, divergences, and price movements. By doing so, we automatically position ourselves to make the best trades possible at all times. The fundamental idea of hedging is to mitigate the risk and not become too presumptuous trying to foresee the future long term. Our system is pure mathematics with great computing power with some other major advantages to most competitors. As we mentioned in the beginning, we are a market-making system, and the principal idea of being a market maker is that we provide market order liquidity. That is, we are buying and selling on both sides of the order book 24 hours per day, every day. So, When a trader wants to execute an order at market price, he or she needs a counterparty to buy or sell the contract. Therefore, we act as that counterparty and place so-called limit orders, which are orders set at a specific price in order book. And once they get filled, we get paid for adding liquidity to the order book. BitMEX need market makers like us to make the exchange attractive to other traders. By providing liquidity on both sides of the order book, we do not only counteract price action risk, but it also creates the opportunity to hold an active position until the price is retracted a sufficient amount for us to exit in profit. And while we are holding these positions, we are actually getting paid meanwhile. It is called funding. If you look at the funding fee shown down to your left, you can see the current rate. This changes every 8 hours and adds to our earnings. For example, when price is going down and we close our short positions in profit, we are simultaneously earning funding fees by holding on to our long positions, and vice versa. So, if we give you a short guide, look down to the left-hand side of the screen, we have the current entry price in which we got into the position and the current leverage and liquidation prices. Since we want to keep the system at a low risk and make sure we make profits steadily every day, we keep leverages down and liquidation prices far away from the current price. Also, we keep a small reserve of Bitcoins if we would need to cover our positions in time of extreme market movements in any direction. To sum it up, to ensure safe and comfortable risk margins, our trading system uses a complex analysis of current and historical market volumes, price action, volatility, and exchange margin risk derived from a data flow from the top 10 Bitcoin exchanges. This data is then integrated into a collaborative hedge strategy that is placed across a multitude of accounts, and we earn BTC via profitable trades and adding liquidity to the order book. So, let's have a look at the wallet and earnings in the specific long account. Between the 21st of November to the 4th of December, we made 6 Bitcoins in 14 days, starting with 21.4 Bitcoin. That is an amazing 28% return on equity. During this time, volatility, which is the price movement of Bitcoin, and the overall trading volume on BitMEX were very high, and we really made a killing. Between the 4th and 18th of December, when volatility and volume has been pretty low, we still made about 4 to 5% return on equity. This is how it works, guys. We do make profit in all market conditions, but we really prosper in times of high volatility and high overall trading volume. Let's head over to a short account, which again is an account that is placing orders to make profit in downtrends. In the middle, you can see that we currently have 48 orders in this specific account, all calculated and placed automatically by our algorithm via APIs. If you look at this account, you can see that we made about 3.4 Bitcoins from November 25th to December 18th, about 24% in 24 days. The trading results speak for themselves. What we are about to show you is a hedging array ranging from mid-October 2017 to mid-October 2018, constituting of 6 accounts starting with a total of 24 BTC. This specific array has been compounding daily with any withdrawals and went from 24 BTC all the way to 306 BTC. That is amazing. With the full compounding effect, that is nearly 1,160% in compounded in 1 year, given the market conditions during that period of time. Obviously, market conditions such as trade volume and volatility change over time, but we are certain that we can reach these numbers continuously going forward. With these great results, we would like to thank you for your attention and wish you a happy trading year in 2019.